What if I told you that the most powerful, most profitable trading indicator isn't on any chart? It's not some fancy algorithm or a secret moving average. Nope. It's actually right there, between your ears. Today, we're going to dive into why mastering your own mind isn't just an edge, it's everything.
90%. I bet you've seen this number thrown around. It's kind of famous in the trading world, and well, for good reason. It's a scary number. But what does it actually mean?
Yeah, that's it. This is the statistic that haunts just about every retail trader. 9 out of 10 people who start this thing, full of excitement and dreams of success, they just don't make it. It's a really tough pill to swallow, and it makes you ask a pretty important question.
I mean, really, is it possible that 90% of people just couldn't find the right system? That they all just missed out on that one magic indicator that would have fixed everything? Nah. The evidence, it points somewhere else entirely. The real problem is a lot closer to home.
This right here, this quote absolutely nails it. See, the market, it's like the ocean. It's huge, it's powerful, and honestly, it doesn't even know you exist. The real fight isn't against the charts or the algos. It's against your own fear, your own greed, your own impatience. It's all about how well you can manage you. So, if the fight is inside our own heads, we need to understand the battlefield, right? So let's pop the hood and take a look at this brain of ours and figure out why it's so amazingly good at keeping us alive, but so bad at trading.
Think about it. Our brains are running on software that's millions of years old. It was designed to do one thing really well: spot a tiger in the grass and react instantly. It was not designed to read candlestick patterns or manage risk. We're basically taking a survival machine and asking it to be a Wall Street analyst.
And these instincts, they were lifesavers back then. Fight or flight kept you from being lunch. Herd mentality kept you safe inside the group. Loss aversion made sure you didn't just casually lose your only food source. But in trading, these exact same instincts are a total disaster. They make you panic sell, they make you chase bubbles with the crowd, and they make you hold on to losing trades way too long. The tools that kept our ancestors alive are literally the things killing our trading account.
This is the perfect picture of the tug of war going on inside your head every time you trade. You've got the amygdala, your ancient emotional alarm system, just screaming danger when a trade goes red. And then you've got your prefrontal cortex, the logical, rational part of your brain, trying to calmly say, hey, stick to the plan.
And here's the kicker, right? The emotional response is instant. It's like lightning. By the time your rational brain even has a chance to boot up and analyze what's going on, your emotional brain has already got your finger hovering over the panic sell button. This is the biological trap every single one of us has to deal with.
Okay, so let's get specific. Let's look at how these instincts show up as real, predictable trading mistakes. And these aren't just, personal flaws. They're well-known cognitive biases, basically mental shortcuts that our brains take that just lead us down the wrong path in the market. All right, first up, we've got confirmation bias. This is a big one. As soon as you decide to buy a stock, your brain basically turns into a hype man for that decision. It starts actively searching for any piece of information that says you were right. And it conveniently ignores everything that says you might be wrong. Sound familiar? This is the little voice of confirmation bias. You'll scroll past 10 negative reports to find that one positive article that validates what you already wanted to believe. And man, it feels good, it feels comforting, but it is an incredibly dangerous way to make decisions with real money on the line. Next, let's talk about recency bias. This is our brain's weird little glitch where it assumes that whatever just happened is probably going to keep happening. It totally messes with our sense of what's likely and what's not. Oh man, who hasn't felt this? You hit a few winners in a row, and suddenly you feel like a genius, like you're invincible. So you start taking bigger risks, getting a little sloppy, and of course, the opposite is just as bad. You take a couple of losses, and suddenly you're terrified to take even a perfect A+ setup.
The third trap is called anchoring. This happens when our brain latches onto one piece of information and just refuses to let go. And for traders, 99% of the time, that anchor is our entry price.
Let me tell you a hard truth. The market has absolutely zero memory of where you bought in. It doesn't care. Your entry price is completely 100% irrelevant to what the price is going to do next. Hanging on just to get back to break even isn't a strategy. It's just your ego talking.
And finally, we get to what might just be the most dangerous trap of them all, the sunk cost fallacy.
This is that little voice in your head, the one that tells you you've already put too much into this trade to get out now.
This is the kind of thinking that turns a small, manageable loss into a catastrophic one. Look, the money you've already lost, it's gone. It's a sunk cost. The only question that matters, the only one, is this. Knowing what I know right now, would I get into this trade? And if the answer is no, then it's time to get out. Period.
Okay, so that was a little heavy, right? We've basically established that our brains are actively working against us in the markets. But here's the good news, and it's really good news. We are not stuck this way. Our brains can be retrained. There is a path forward.
And that path starts right here, with a really hard look in the mirror. You can't fix a problem if you pretend it doesn't exist. You have to be willing to look at your mistakes, your emotional decisions, without your ego getting in the way. Self-awareness is the absolute bedrock of all of this.
So here's a simple exercise you can start today. For your next 20 trades, log your entry and exit, but also log your emotional state. Give it a rating from 1 to 10, 1 being totally calm, 10 being a complete anxious mess. Then look at the data. Are your biggest losses happening when you're an 8 or a 9? What's triggering that feeling? This information is like a treasure map to your own psychological weak spots.
And this really is the whole point. Your brain isn't a fixed piece of hardware. It's more like adaptable software. Through conscious effort, through journaling, through choosing the logical action over and over again, you can literally build new habits and new ways of thinking. Success in trading isn't about finding some magical strategy, it's about forging a bulletproof mindset.
So I'll just leave you with this final thought. The market, it has no feelings. It has no ego, no hope, no fear. It just is. And the entire journey of becoming a consistently profitable trader is the journey of developing that same kind of emotional control. The real question is, are you willing to do the work to get there?